first cryptocurrency that came to this world in 2009 in wake of the financial crash of US housing in 2007-8. Right after that, there was this white paper that came on the internet and said that this is how a currency should be. It should be digital, it should be on a technology called blockchain, it should function like this. It really clicked with the people, with investors, with businesses, with retail or just consumers in general, and it picked up in value. It almost became an alternative to gold. Just the way people buy and keep gold as a value store, as a way to store value in it, people started buying Bitcoin as an investment, as a store of value. So far, Bitcoin has been primarily being used for that, though it was launched as a currency, but not a lot of people are transacting in it as a currency. More and more people are buying it not to transact in it as a currency, but to just store value in it, because it's an assumption that BTC eventually is going to be the digital token or currency that's going to win this war of digital tokens and emerge victorious. And hence people think that this is the currency of future, and hence a lot of people are putting their money into it, buying more and more BTC and hoarding up to buy it one fine day when it becomes $1 million or $2 million. Ethereum was one of the first cryptocurrencies ICOs that happened. It happened in 2014 when this guy called Vitalik Buterin went out and raised money in terms of BTC via crowdfunding, which now is called ICO, or initial coin offering. That was the beginning of Ethereum. Ethereum was launched not just to be a currency but also an underlying product. What was the product? The product was a platform. Just the way Android is a technology platform on which people can come and build apps, Ethereum was supposed to be a similar platform but just for blockchain world. If people wanted to build blockchain apps, they could come and build it on Ethereum. Ripple was a cryptocurrency that was launched in 2012, and unlike other cryptocurrencies which are more peer-to-peer and consumer-to-consumer, this was built more in a fashion of business to business. So Ripple built it for businesses. It built it for banks and other financial institutions to enable their payments and international settlements to be faster, to be fail-safe, to be instant, to be cheaper. So it was built more for businesses as opposed to consumer. So in that sense, Ripple did have an actual product which could be differentiator and which differentiates Ripple from other cryptocurrencies, and hence make Ripple a good investment. Dash was a cryptocurrency launched in 2014. Its first name was Xcoin, and within a month it was rechristened as Darkcoin, and then a year later in 2015 it was again rechristened to Dash. So that was just to give you a brief history of its name. In terms of how the coin has done since 2014, until start of 2017 it didn't do much, but 2017 was a spectacular year. Of course, not just for Dash, for all the cryptocurrency in general, but Dash definitely saw one of the biggest rise. It went all the way from under $1 to $1,500 in 2017. That was tremendous. Compare that to Bitcoin, which went from 900 to 19,000, so that was like 20x, 20 times, but definitely not 1,500 times. Zcash is a cryptocurrency that was launched in October 2016 at the rate of somewhere around $4,000 a coin, and right after the launch it dropped to approximately $40 a coin and didn't do that well. And since then it has been lying low until first quarter of 2017 and the rest of 2017, when it rose to a value of $800 from $40 a coin. Why did that happen? Broadly because the market itself was going through a boom, and it was a hot period for cryptocurrency market. Monero was a cryptocurrency launched in 2014, and until 2016 it didn't do much. Its value was all the time between $0 to $10 or $15, and somewhere in late 2016 the value started shooting up, and all the way till $400 it shot up. Today it's January 2018 and it's $400. Why did it shoot up so much? There was one macroeconomic reason of the crypto world, that the entire crypto world got very heated up. There was so much money coming in, so Monero got the benefit. But the product itself also had a differentiator and hence had a value. Deep dive into coins. In this chapter, we'll be studying some of the more popular coins in details. We'll be studying what is the technology behind them, what are the pros and cons, why are people bullish on a coin or why are people bearish on some other coin, what is a good reason to buy a coin or not a good reason to buy a coin. Precisely, we'll be doing a research on the coins one by one. So we'll be picking up some 6, 8, 10 coins and going through them today. The first one we're going to talk about is IOTA. IOTA stands for IOTA, which is IoT is Internet of Things, as you would guess, and A stands for application. So IOTA would be Internet of Things application. The coin was designed to leverage the resources and services within the ecosystem of IoT. Basically, it is meant to be able to function very smoothly within the IoT world and do nano payments and do nano transfer of data and energy, etc. So it is built for that ecosystem. They have also gone beyond blockchain technology and have built it in a way which is blockless, quote unquote. They like to call it blockless, and this technology is called Tangle. What Tangle has done for them, unlike other blockchain, is that it allows them to do transactions without transaction fee. So that's great. Those were some of the pros of IOTA. Why is it good? For example, if you consider the news around IOTA partnered with Microsoft, and that took their value up by 600% in December. And they have been doing some very good work and marketing around that. So those were all good stuff about IOTA. What are bad things about IOTA? What are the cons? One is that just like in blockchain, nobody can change or edit anything because it's all immutable. Because for somebody to do it, they have to have more than 51% of the network's computing power to be able to go to a point in chain and change the data and then change all subsequent data. You really need to have most of the power of the network, which is 51%. In IOTA, this number drops to 34%. Anybody with 34% of the computing power of the network can mutate or can change anything that is written in IOTA network. So that is a bit of concern. And to deal with that, because if their blockchain is not mutable, if their technology is not mutable, then the whole purpose gets defeated. So to deal with this challenge, they are currently using a centralized system to control this. And they want to say that they're going to make it truly decentralized after the network is huge, and after the network is huge enough for anybody to get 34% of computing power alone. So till that point, they will be centrally running and operating in it. In that sense, it's not truly decentralized as a blockchain product should be. Hi again, let's talk about the various risks that anybody existing in crypto world is facing. The most important risks are, first of all, regulatory risk, then technical risk, then security, then ethics of the people involved, and then volatility of the pricing of the cryptocurrencies. So let's deep dive into them. Regulatory first. What is the regulatory risk that anybody is facing? We'll be talking in more detail the risk of Indian regulations and then briefly touch upon international ones. In India, RBI issued a regulatory risk warning for everybody involved in cryptocurrency investing, both in 2013 and again in 2017, saying that the regulations is not out, the government does not recommend it, and if you're doing it, if you're investing or raising funds or taking other people's money and investing, all of it is subject to capital risk, market risk, regulatory risk, technical risk, and people should be aware of it. Why are they doing it? They are doing it because when retail people go and invest their money in any asset class in any country, it is the fiduciary duty of the government to protect those retail investors from anybody who might run away from their money. Briefly, is it illegal to invest in cryptocurrencies? Are you also looking at criminal liability risk? No, you are not. It is not illegal, not legal, which it means that till government comes out and says that it is illegal, you are completely in your right to be doing it. So you're not facing a criminal proceeding risk. Hi, today we'll be talking about technical analysis. How can we use technical analysis for buying or selling cryptocurrencies? We'll be using this tool called coinigy.com to do the technical analysis all the same. Technical analysis is when you decide to buy or sell an asset just by looking at its price graph and by nothing else. If you don't know anything about the coin or the stock you are going to trade in, and you decide to buy it just because of the way the price graph is trending. Say there are particular indicators which say that the price has been increasing but now it will decrease. Say you look at the graph and such an indicator has come on the graph and you say that now it's time to sell, and you sell. So whenever you make a decision of trade based purely on the graph without even caring for the name of the asset or the stock or the cryptocurrency, then it is called technical analysis. Overall, in this technical analysis, we'll be looking at a couple of different techniques. One of them will be involving candlesticks. The other one will be involving MACD or a mathematical average that we'll come to. And third one will be using an instrument that Coinigy allows you to use called Fibonacci retracement. What is bullish? When more buying happens than selling, it is called a bullish market, and whenever more selling happens than buying, it is called a bearish market. Whenever a trend reverses to a buying trend, it is called a bullish engulfing, and whenever there is a trend reversal using candlesticks to become a more selling market, it is called a bearish candle. For example, on this XRP graph we picked, the prices are rising here all the way, so this is a bullish market, and then the prices are falling all the way here. This is a bearish market because the overall trend is that of a fall of a price, which indicates more selling than buying happening. So this is a bearish market and this is a bullish market. You usually want to buy at the start of a bullish market, and you usually want to sell at the start of a bearish market. You always buy when it's cheap. So whenever the prices are beginning to rise, you already buy because you want to buy cheap, and whenever the prices have risen and are going to start falling, you sell then because you want to sell high. For example, consider a pen you bought from a friend. If you bought it for $2 from a friend, you want to sell it to a third friend who will buy it for $4. So you want to buy for $2 and you want to sell for $4. So that's a general principle of trading: buy low, sell high. And we are always looking for patterns that allow us to identify those moments. In technical analysis, that is precisely what we are doing. Hi, let's talk about blockchain wallets. What are wallets? What is the purpose of having wallets? How can you tell which wallet is good for your purpose and which one is not so great? A wallet is a blockchain address with a private key. You can think of it like your bank account or like your Gmail. Just the way you need your Gmail client or Gmail to access your email, to send email to other people and to receive emails into it, you similarly need Bitcoin wallet or cryptocurrency wallet to receive cryptocurrency into it and to send cryptocurrency out of it. And just the way Gmail or any email client has a password which you need to feed in order to see emails or write emails from it, in case of cryptocurrency wallets, you need private keys in order to send bitcoins or cryptocurrency out of it. There are two different kind of wallets. One is a hot wallet and another is a cold wallet. And the essential difference between the two is about where you keep the private key. A hot wallet is all those exchanges, cryptocurrency exchanges, where you go to buy your different coins such as ZepPay, Poloniex, Binance, etc. Why are they hot wallet? As we said previously, it is about where the private key or the password is kept. All these are hot wallets because these exchanges have your private key already with them. You don't even in most cases see your private key. As opposed to that, cold wallet is low in its activity. Why? because the private key is not pre-fed into the wallet address. Like you can go to the wallet address and you can see your bitcoins there, but you will not be able to transact those bitcoin out to somebody else without actually manually typing in the private key each time or scanning the private key each time you want to send out the cryptocurrency. In order to buy your cryptocurrencies, you need to go to different cryptocurrencies exchanges. What are cryptocurrency exchanges? Cryptocurrency exchanges are different websites or different platforms where you can go on to get onto the internet and write the name of those websites or download those apps where you can go to on these websites and apps to register yourself as a buyer or as a trader or as an investor by giving in your documents. Not all of them need your document, but most will need your document. Do your KYC, log you on as a trader or investor or a user, and then those websites will allow you to buy or sell cryptocurrencies on their websites. Not all exchanges will have all the coins listed on them, so you might need to be present on more than one exchanges. What are the different kind of exchanges? The three kind of exchanges we're going to talk today about are trading platform, direct trading, and then brokers. Let's discuss what are the steps in participating in an ICO. The first step is to buy your Ethereum or Bitcoin. Second would be to transfer your Bitcoin or Ethereum to a wallet whose private key is with you. Third step would be to send your Ethereum or Bitcoin to the company who's doing ICO and to receive their tokens in return. Fourth step would be to store the tokens you've freshly received into a very safe wallet somewhere. In this chapter, we'll be discussing how to buy your first altcoin. What we mean by altcoin is any cryptocurrency other than Bitcoin. Mostly you will not be able to buy most of the cryptocurrencies from fiat or the traditional money directly, and you will need to first buy Ethereum or Bitcoin from your fiat currency, from your traditional money like INR or USD, and then use this Bitcoin or Ethereum or USDT or Ripple. There are a couple of such currencies you can buy from fiat, and mostly rest of all the currencies you will have to buy using these cryptocurrencies that you will first buy. For example, if you are in US, you can buy Bitcoin from dollars on Coinbase, and then there are so many other currencies such as Stellar, etc., that if you want to buy, you can buy Stellar from your Bitcoin that you have bought. Similarly, in India, if you want to buy some of the coins, it will usually just be very limited to Bitcoin, Ethereum, Ripple or Litecoin that you can buy from INR. And then if you want to buy something more exotic, say like IOTA, you will have to transfer your Bitcoin you bought from your INR, from your ZepPay to, say for example, Binance, and whatever Bitcoin you transfer to Binance, from that Bitcoin you'll be able to buy IOTA from Binance. So usually the gamut of cryptocurrencies can mostly just be bought off Bitcoin or the more important or bigger cryptocurrencies, and not directly from INR. So for Indian users, we'll be covering today ZepPay. You can go to ZepPay to buy your Bitcoin, and then you can transfer this Bitcoin, as we said, to other exchanges and buy exotic cryptocurrencies. And for people in US, we'll be covering Coinbase. You can go to Coinbase, put your dollars in and buy your cryptocurrency, and then transfer this Bitcoin to whichever exchange in the world you want to and buy other currencies of it. There are three steps to buying Bitcoin from ZepPay in India. You have to download the app, get your KYC done in the first step, put your INR or fiat currency into ZepPay account, and once that's loaded, buy Bitcoin from your INR. So those will be the three steps we'll be covering. And once you have bought BTC, we'll talk about how to move it to Poloniex and what are the steps to buy other currencies from Poloniex. So you will have to move your Bitcoin to Poloniex. What will be the steps on Poloniex once we are there? Again, you will have to do your KYC, then transfer your Bitcoin from your ZepPay to Poloniex, and then you can buy any coin, say Steam or Stellar, from your Bitcoin.